Madhu, hi, good to have you with us. How have you been?
Good to meet you, Ashu. Yeah, it's a really, really interesting times, I should say. Yeah. So I've been
I couldn't agree more. Couldn't agree more, right? Why am I excited about this conversation, Madhu? Is that I think venture capital as a space, I think, is going through a very, very different time, right? I think with what we're seeing in the macroeconomic environment, right? I think while it's scary, right? But I think the foundation is getting established in a beautiful way. What we've seen in the last 2.5 years, this transformation that we've seen, right? I think world is becoming one in many ways, right? And I think that's very, very exciting. And it's going to need more and more capital, right? This institutionalization that is coming, right? I think it's like a perfect playing ground, of course, right? I think there are these temporary aberrations that we continue to sort of experience, right? We're going to talk about some of that, right? Because this is an aberration which is unfortunately slightly more complex, right? And what does it do to the market? We're going to touch upon that, right? And that how does that, for example, make your thesis look right when you're investing in companies? We're going to talk some of that in the course of the conversation, right? But it's great to
sure.
have you with us. I'd love to start this conversation with a quick round of introduction, and and from there on, we talk of Rocketship, right, and all of your plans for future.
Awesome. It's great to be here, and with your intro was sort of really. It's really I think in the moment now, and as you said, there's a lot of aberrations along the way, but I think it's going to be interesting times, and especially for India. But yeah.
We'd love to start with your introduction, Madhu.
Fantastic. So, I am a partner at Rocketship. Rocketship is a fund based out of the Valley, and we are a data-driven fund. What that means
Right.
is that we invest using, our data and algorithms that we've built. And so we are sector agnostic. We are a geography agnostic, and
Right.
we invest all over the world.
Right.
And based in the Valley. I come from a background of operator stroke data science. I've been in the C-suite of many unicorns
Right.
here and in Southeast Asia and Singapore, in
Right.
Indonesia. At Gojek, and came back here, and I was also sort of in the C-suite of a later stage startup before I decided to go back into investing. I'd done some private equity investing in
Right.
Singapore as well. So, as having said that, that's a little bit of operator stroke sort of previous investing experience all over the world. Came to
Sure.
Rocketship, joined Rocketship, and I couldn't have found a better team because this is a global team. We are
Right.
global investors, and we've got about $250 million AUM right now. So a lot of dry powder, a lot of good capital,
Right.
which is a good point right now. It's a good place to be.
It's a
Not
buyer's market.
complaining. Yeah, and yeah, man, and really looking forward to sort of seeing what's going to unfold around the world now as we
Super.
go into this. Yeah.
Super interesting. Madhu, we're going to talk about some of that in just a bit, right? But before I do that, something amazing that you highlighted, right? Which is a data-driven thesis that you have, right? I'd love to dig in a little more, right? I mean, had you been a secondary market investor, of course, I've had, that's a more predictable environment, right? Because you
Yeah.
have just so much more information. There are disclaimers, disclosures, so many things, right? But as soon as you start talking about data-driven approach in a primary market, right? What are you banking on? The macros, right? And fusing that with some micros. I mean, I'd love to understand what goes into
Yeah.
this.
Actually, it's not very intuitive, but most folks ask us this. Are you? Do you
Sure.
guys have a thesis, and is it macro? And do you sort of go in? And actually, it's a very bottoms up driven
Mhm.
thesis where we really the data speaks to us, and there's companies bubbling up, and so
Sure.
individual companies bubbling up to sort of form patterns, and those are pretty
Right.
powerful. So we don't, as far as possible, we don't like to get in the way of data, and we don't
Right.
like to bias data with our own sort of incorrect biases and
Right.
inherent biases of macroeconomies or or sector or anything. So there's
Wow.
really no bias at all. Yeah,
Right. I'd love an example of that. I mean, if you could just give us, say, possibly the process of shortlisting, right? If you could give us a sense, and it'd be very,
absolutely,
very interesting to understand that. I
totally.
think this could
And
this could possibly be that course 101 for many others, right? Who continue to look at a lot of macros. Founding team becomes a very large part of it. Of course, that's a hygiene factor. And I'm
yeah.
not saying that you're not doing that, right? But I think given this thesis, I think a lot more people can possibly use some of these nuances to invest better.
Absolutely. And, and I think you're so right. There's so many factors. There's X number of factors. So we have the largest startup database, and then we have
Right.
many factors that we build in. But to sort of give you an example, a concrete example, we
Sure.
started seeing a lot of companies in 2016 in India.
Right.
2016, 2017, and we just
Sure.
weren't sure what was going on because nobody in the ground was really sort of seeing that. And so we called up some
Right.
investors in India, and they're like, look, this is business as usual. What's going on? What are you guys
Sure.
seeing in your algorithms? And we told them, and they had not even seen these companies.
Right.
And there was some Chinese, folks that were starting these companies
Sure.
that was really sort of skyrocketing in India. And turned out that, it was sort of really highly correlated with geos surfacing with its
Interesting.
data platform.
Right.
So we've also seen, and it's just continued. And we were very
Right.
early in India, and now, obviously the global, everybody is joined in, and there's a lot of global interest in India. So
Sure.
we had success with No Broker, Moglix, just a bunch of others.
Interesting.
But even just like an Apna comes up in our
Right.
algorithm. And so there's really no, Apna is a category defining company, and it comes
Absolutely.
up. There's really no sort of, hey, this is a fintech company, we want to find
Right.
fintech in India. Nothing of the sort, no
Right.
sort of preconceived notions at all. We went in, we
Right.
found Apna, which bubbled up from our algos, like I told you.
Right. Right.
And
Interesting.
we spoke to Nirmit, and the rest is history. We spoke to him on a Thursday or a Friday, I think, and we had
Right.
finished investing by Sunday. So that's the
Wow.
beauty of the algorithm, and that's sort of the freshness of what we just never know what we're going to find.
That's amazing. And Madhu, tell me this, right? I'm intrigued at a very different level, right? Now, when I look at India, I've had a share, part of my career, a reasonable part of my career in the banking business, right? Where I've continued to look at a lot of assets that could be invested in, and some part of it that I right? Now, one of the biggest challenges, right, when you look at a market like India, is the cultural complexity that you kind of have, right? And I think there is no other market which kind of gives you the kind of complexity that we have. That's number one, right? And then of course there are a lot of these baggages that we kind of carry, right?
Yeah.
They continue to be a very significant part of our consumption trends, right? I think mine is the last 2 years, right? They've brought in a certain homogeneity. If you look at for example, you know, uh, PPP, for example, right? Or per capita income, right? Again, that's something which is very, very, spread out, right? It makes
Absolutely.
the it makes it a very, very complex situation, right? Infrastructure, for example, comes in. So essentially, what I'm trying to highlight in the process is that India is that market which is one of those most complex markets, right? So when you're talking about this data-driven approach, right? How would so, for example, say growth becomes important for a company in a certain common way. What are some of those parameters that you would or an algo would look at, right? I'd have to understand that
Totally. And I
because
think you're right.
these trends are
Yeah.
not very, very clear.
No, totally. There's nothing homogeneous about India. It's very
Correct.
heterogeneous.
Yes.
And you absolutely hit the point. And I think that's where the beauty of the algorithm really lies.
Right.
And that's sort of the highlight of a company like Apna, which is
Mhm.
really looking at tier 2, tier 3 cities. It's a category defining company, like I said.
Uh-huh.
There's really no factors that pick up
Sure.
something like something is
Right.
happening, there's growth.
Right.
That was Apna. But then there's also the other B2B companies and other companies that we see out of India,
Sure. Right.
so there's different metrics that we measure. There's a
Okay.
lot of metrics that we measure that are sort of mimicking growth, revenue,
Okay.
traction, that
Right.
are mimicking sort of the hygiene metrics that you alluded to in the beginning of the interview, which is
Sure.
the founder quality.
Right.
What's the sector, and what are the kinds of different companies that have come about around the world? So there
Right.
are lots of things. Without giving away the secret sauce, it's a very complex data problem. It's
Right.
not it's a
It
very
is.
complex, nuanced data problem. How do you really sort of assimilate this entire longitudinal data of startup databases across the world? How do you
Right.
how do you sort of make it uniform?
Sure.
Because there's categorization is a simple thing, but somebody categorizes something as fintech, somebody categorizes something as
Absolutely.
lending. So
Right.
within fintech you can have many bins. So how do you sort of categorize something uniformly,
Absolutely.
make it homogeneous in the
Right.
heterogeneity of something? You don't really want to lose the heterogeneous power of the data as well.
Sure.
So it's a complex problem, and we've found a lot of success because of the companies that we've invested in and we've found. And I don't want to go into sort of my nerdy precision and recall and specificity and sensitivity, but we just do a lot of back end work to see if the feedback loops are sort of fresh. We are looking at companies, we are evaluating them, and then one of the biggest advantages is that we keep looking at at all these sort of KPI metrics, if you will, of the data to see how they're performing, especially in a heterogeneous market like India.
Right. Well, I'm so, I mean, I'm kind of itching to ask you what's the success rate, but I think that's a question I'm going to say for in just a bit, right?
I think the
Because
rate of every fund, Ashu, very simply put, is that are you able to raise the next fund, and are you excited, and is the money sort of flowing in? And the answer to all those three things or two things is a resounding yes.
interesting. Madhu, now when you're doing this kind of an approach, right? And trust you me, I mean, this conversation has to be just so much more, right? I'm kind of drawn into talking more about data, right? Now, when you look at some of the other VC models, right? Some of the other VCs in the market, right? Now, typically, these are VCs who identify a certain opportunity, they identify a certain shift, right? They look at the market maturity, and then they go in with that thesis, with that conviction, and support these companies, right? The ones they've identified, right? With terms of capital. In many ways, a lot of these macros, because they are looking right, uh, there is a certain sense of fearlessness. It's calculated. It's calculated, right? Where they go in and try and change that shift, right, or fast track that shift, which is certain
Yeah.
model of incentivization, and that's the reason it's kind of massively debated. Efficiency, for example, is massively debated, right? Now, with what you are doing, I have to understand this, right? I mean, are you in a way able to have a relationship or an investment where you don't necessarily are solving it by capital just becomes a means to a way, and these are companies which are on a path to profitably much faster vis-a-vis your competition. What's the scene there? I'd love to understand.
Absolutely. I think, look, when it comes to India, capital was definitely something that in VC, capital is the strength, is the currency.
Sure. Absolutely.
It's what we all use
Right.
to sort of get into the best companies. We are an early stage VC fund
Mm-hmm.
just by nature, so we are
Sure.
doing Series A's and Series B's, and some
Right.
Series C's, some pre-seeds.
Sure.
And so the capital is always going to sort of be the most important thing for us.
Right.
What really precedes capital sometimes is what we're able to give back.
Sure.
Which is, we are operators. You're going to be finding very, very few times, on the cap table, folks
Right.
that have done
Sure.
before. So we can give
Mm-hmm.
back to the companies that way. And there are some companies that don't really require our capital. It's all the time, because what
Right.
happens with finding companies with data is that you find some of the fastest growing companies all over the
Sure.
world. It's our business to get into these fastest growing
Right.
companies.
Sure.
Then they don't really need money, because they have a lot of other people that want
Interesting.
in, at your point. And that's when I think our sort of unique advantage of having been there, done that, built businesses,
Interesting.
which not many other investors have,
Right.
comes into play in a huge way.
Right.
You even take Khata Book, for example. We
Right.
got into CSD of Khata Book. This is going from strength to strength. A lot of India's sort of GDP is being processed, is
Sure.
going through it. I don't know, it covers a lot of it. And
Right.
so this is a phenomenal success. And
Right.
I think when we got in, our sense really was, they didn't really, Ravish didn't even really require the capital as much
Right.
as sort of having a team that had done this before,
Interesting.
used data and built companies. Yeah.
Right. Very interesting. Very interesting. Madhu, I think, we'll need possibly another session, right, to cover a lot of this, right? And like I said, I'm more and more intrigued to know more, about the secret sauce, right? And more importantly, I think if we can do this right, I think it's going to help many, many other people use data to sort of invest better, right? Something that, like I said, right, we've largely
Yeah.
been banking on the more visible factor, right? The team and
Yeah.
who's coming in, who's leading the next round, so and so forth, right?
Actually,
That becomes a
you
big
touched
problem.
upon something really interesting, Ashu. Not to cut you off, but we started this very early,
Right.
because there are not too many VCs. When we started
Sure.
the fund in 2014, there were not
Mhm.
too many VCs that were using data.
Right.
And then you have this, this problem of sort of, we always had a threefold problem. One
Sure.
is to sort of find the startups and invest in them. And one is to also convince on the other side LPs, because
Right.
they were shocked, what the hell is this? Like we've seen
Right.
this in public markets. Even that is a little nascent. And you guys are
Right.
telling me that private markets, where we don't know the revenue and all of that, you guys are
Right.
going to sort of solve it this way. So it was a very difficult sort of a double-edged sword, because, it's a marketplace. We have to sell our LPs, we have to sell the startups, what's the
Right.
proposition here? And to your point, it's not always about the capital alone, even though
Right.
we are the currency is capital mostly, but it's much more than that, as you know now.
You know,
Uh,
uh,
but Ribbit Capital and others, and I
Right.
shouldn't name names here, but I'm just going to do it on a limb. They were actually thinking about data, and they came to us. So
Right.
we've actually been able to help quite a few people very early on, and my partners have,
Right.
to be precise.
Very interesting. Madhu, I've been in this ecosystem, right? I've been in the ecosystem, the investing ecosystem, right, for a reasonable amount of time, right? Now, when I
Yep.
came from secondary markets, right, the bigger worry about this around the times that you're talking about, right, even till about 17, 18, this was still sort of getting organized at many levels, right? My biggest of all worry was that, when you are channelizing somebody else's capital, right, into an investment which is in a complex market like India, right, and you not necessarily know of, competition, right, or there's inconsistency in that information play, you can possibly get hit in the face without even realizing that your money is
Yep.
your investment is not going to be possibly give you the kind of returns that you possibly anticipated, right? At that uh, I'm going to move into the other direction, right? Where we're going to talk about the portfolio that you have. Some of the companies that you already mentioned, right, are I think doing exceptional work, right? I think they're changing the landscape of how, for example, trade and transaction happens in the country. But I'd let you talk about that, right? Why don't you give us some of the portfolio companies that you have, right, and
Absolutely.
what's been the experience of having invested in them?
I think sort of going back to the fact that we are finding sort of so much of heterogeneity in India
Sure.
and investing there, it's
Mhm.
it's a risk. And the biggest thing is that we've seen so much of deal flow. What we have is an infinite amount of deal flow, and when you
Sure.
have spoken to when you see thousands of companies, and when you've
Right.
spoken to hundreds, your certainty in what you're investing in sort of becomes bigger and bigger. And
Mhm.
to that point, we have about um, we have half of our portfolio of fund two was all was India,
Right.
which is a huge amount because India
Sure.
was really keen
Mhm.
at that point.
Right.
And I said we are not thesis driven or anything. This just happened because of the data. And so we
Right.
have some of the best companies in our portfolio that today are no broker Moglix from fund one.
Mhm.
We have Apna, Khata Book, Animal, Fampay.
Right.
Um, Fund Two, and many others, Jar, Teachment. I can go on sort of naming
Right.
some of the that are close to us, but it's just these are great companies that we found in India doing really well, solving tier
Right.
two, tier three problems, solving actually the Bharat problem, and
Sure.
which we sort of found very, very, concretely emerging from our data.
Right.
Yeah.
Very
So that's
interesting.
it. Yeah.
Very interesting. Madhu, I'm going to talk a little about about what had happened in about in the types of book, right? Of course, there is a certain thesis that I think each one of us has, right. Great Asiatic Journal have a thesis, right? I think it's brought in a certain sense of or a certain sense of homogeneity, right, in the Indian markets, which was so inconsistent at many levels, right? Because that was largely because the entire country was consuming from just about 3 or 4 screens, right? And that brings in a certain predictability, right? I'd love to understand, how have you looked at that event? Right, as a fund. Of course, I want to talk about the current problems that we're kind of facing right now, but that's got to be the next question, right? But what's your thesis on how are you looking at the market's image, right? My sense is they're in a connected market, where there's just seamless information flow, right? It's a very, very transparent market, right? Agility has to get redefined in the process, right? How are you looking at that, right? Today, when you're looking at making these investments, right? What are some of the nuances that have now become part of your investing thesis, right, which possibly were looked at differently in a pre-COVID era?
Absolutely. I think, look, one of the things that we had, we've now become very comfortable with how India works with, things like edtech, for example. How
Sure.
does India sort of unfold?
Right.
What are the possible acquisition paths? What are the sort of revenue paths? What are the monetization paths?
Sure.
And I'm giving you one example of edtech, but
Right.
we didn't really have a appreciation for because nobody knew what the exit market was going to be in India. The
Sure.
valuations in the last 2 years has been a sort of a defining time. India has
Right.
arrived in a
Right.
true global sense. But when we were investing, we didn't really know the exit paths for most of these companies, especially
Right.
when you speak to folks in the West, India was still sort of that wild card of how do you exit, and and
Sure.
China was way ahead. And so that was something that we had not viscerally sort of experienced, and
Sure.
now we have, and now we sort of know the paths in India, and which I think everybody has, everybody has a better sense of it now. Some
Right.
people more so than others, and I think we'd like to count ourselves in the bucket of some people more so than others, just because we're seeing these companies, and we're connected, and we know the paths, and the M&As, and just the spectrum and just the ecosystem.
Sure.
So that's something that's huge. Yeah.
Very interesting. Well, I'm going to talk about where we are currently, right? Now, the macroeconomic conditions right now globally are not necessarily very conducive, right? We're seeing a flight
Yeah.
of capital across all emerging markets, right? And to safer havens. And, we're seeing Fed continuously sort of trying to improve rates, right? And, there's this chaos, right? Europe, again, is reeling under very, very, very different kind of pressure, right? Because of
Yeah.
this entire, Russia-Ukraine war, right? They're possibly at the verge of a crisis. UK, again, is in a very, very difficult place, right? Political and financial, right? I think there's this almost a very, very chaotic sort of a situation, right? Data, for example, when you talk of data-led decision making, right? When you don't necessarily, we're entering a phase where we don't necessarily really
Totally.
know how all of this is going to sort of play out,
Yeah.
right? The complexities of a very different level. And the worst part is it's all converging together, right? It's all started to, while of course these are happening in silos, but it's all coming together, right? And that's where the worry starts, right? Beyond December, what's your sense? I mean, how are you looking at it, right? Are we getting into a phase which is going to be a prolonged recessionary phase of sorts? What happens to the portfolio companies around that, right? Because a large part of companies, across the globe, including in India, while some of the ones that you mentioned, right, are not necessarily very engagement-driven companies, but engagement continues to be the primary currency, right, for startup investing in venture
Yep.
portfolio companies, right? What's your sense of it? What do you make out of all of this complexity?
I think that's a really good question. I think it's also a very relevant question for these times, because India has, a lot of the companies that we've obviously invested in has had a lot of growth, and it's a growth
Sure.
story
Mhm.
predominantly. And some of them, like Quizzes, has just been extraordinarily profitable as well. It's taken 85-90% of the US school market sitting in India
Sure.
quietly. This company that just emerges as every school in the US almost uses Quizzes.
Right.
That's K through 12, and that's a phenomenal story. So we
Right.
have buckets of companies obviously in our portfolio makeup, but you know I think that it's really, really important at times of sort of uncertainty, and especially when you're going to be entering periods of recession. What your runway is obviously important, the amount of capital you've raised is important, but
Right.
what's also really important is not to sort of like be cowed down by what's going on, because when you have the money, there are two
Mhm.
ways to do it. Either you sort of
Sure.
survive and get to the other side and you
Right.
limp your way across, and after that, I think you're dead anyway. You're
Right.
dead anyway.
Right.
Or you thrive through it, and do the things that you should be. Take calculated risks. I'm not asking you
Right.
to sort of go through the cash at the same pace that you were before. You have to be
Right.
very, very cognizant. But I think that it's really important to sort of take those calculated risks more so
Mhm.
than ever if you're sitting on the capital, because I think the only way to get out of this is to thrive,
Mhm.
and not just sort of survive and limp your way out of it and then die, only to come
Interesting.
out and then retire into something, into a coma, which is
Right.
which is what sort of worrisome when you have different sort of folks telling you, do the monetization, do the profitability, or just
Right.
conserve cash. This is not the time. I think it's the time to sort of really be taking those calculated risks, and to go against, and this is for founders, to
Sure.
go against sort of the popular, the fable advice that you're getting, which is, be careful, and and you should be, but you should take the calculated risks more so
Interesting.
than
Interesting. Interesting. Although we're seeing a lot of emails flying, right? Right, left, and center. There's a lot of advice which is going out,
yeah.
to various portfolio fund companies, right? Or sorry, fund portfolio companies, right? What are the advices that you sent out to your portfolio, right? What are you asking them to prioritize in the process? As the consumer landscape looks complicated, right? Purchase possibly could get deferred in the process, right? What's your advice? And possibly, I think many other startups can use this, as a uh,
Yeah,
as a direction, right? As an input,
totally. And I think we put our money where our mouth is, which is
right?
exactly what I told you in the previous answer, which
Mhm.
is we tell them to take calculated risks. We ask them to continue the growth story.
Sure.
What happened with what have we've seen these global recessions
Right.
come and go, but the companies that always survive are the ones that sort of double down on their on the core on what's working. Facebook is an
Sure.
example.
Sure.
Everybody, or Twitter is also another.
Mhm.
Everybody thought Facebook was dead because it just
Right.
had the growth story and it hadn't figured out the monetization bit. But
Mhm.
once you get something right, then things fall into place, and
Sure.
you just have to sort of stick to what you're really good at, what your
Mhm.
proposition is at the core, and also take these risks that you should be. This is not the time to be too afraid and to sort of be in
Sure.
a state of sort of coma or a limbo. This is the time to sort of really be turning the levers, and having the guts to sort of stand up to what you really think is the right way to run your company, and not to
Interesting.
be bound down by any investor, because no VC knows what to do. They're not running and breathing your problem.
Sure.
And when you've been an operator, I think what India lacks is mentors,
Mhm.
mentorship, because there's a
Right.
lot of money floating around, but many of
And
these
exposure.
founders and exposure, many of
Yeah.
these founders don't just have folks that have built multi-billion-dollar businesses outside
Sure.
or in the company that are
Right.
talking to them, and they actually do. Some of them do, some of them don't. But I just think that a lot more gutsiness is required in this environment to be able to sort of
Interesting.
stand up for what you think is the core proposition of your startup.
Interesting. Madhu, you've actually walked me into a very interesting question, right? And a very important question, right? Now, when you look at founders in India, right? I mean, we are a very, very large market, right? We're possibly the last billion people market, right? With that density, that concentration, right? Unfortunately for us, I think the economics is not necessarily as exciting, right? I think we're
Yeah.
getting there, right? But it's not necessarily. But for some reason, we've essentially been, and we've funded companies, right? Even, for example, investors, say like yourself, right? Like, who've come in, to India, have largely chosen to fund companies that are inward looking, right? I mean, what we've seen the last possibly a year and a half, two, is a certain shift that has happened in SaaS business, for example, right? And that's largely because of cost arbitrage, right? Where you're basically your factory is essentially, or your production is happening in India, and you kind of selling to global markets, right? We're not seeing that a lot of that across other bits and pieces. I mean, we're seeing that a reflection of that, smaller reflection of that in edtech companies, right? But again, the core proposition continues to be the arbitrage that we continue to offer, right? And not a technological superiority, right? Or a product level differentiation, right? What's your sense of it, right? I mean, how do you see that? I mean, is this a time for us to become an export market? I mean, Israel is an example, a brilliant example of sorts, right? I ask you this question. I possibly wouldn't ask this question, to an Indian VC, right? Because the focus is right, the orientation is right. Where you are sitting is an advantage point, right? Where you have access to just so much more which is happening, right?
Yeah.
We have incredible founders, unfortunately inward look, right? In a way, you've covered that by saying that you lack mentorship and exposure and so on and so forth, right? But what's your sense? Is there what is lacking for us to become, us to sort of ship out great companies out of India, which in a way, Indonesia, for example, is now being led by many Indian founders, right? That's a brilliant example of sorts, right? But
Absolutely.
that's just one of such markets, right? What's your sense of it? I mean, what's
So
lacking?
I think I'll sidestep that question a little bit, and then not really sidestep it, but sort of like answer it a different way. I think
Sure.
India is already becoming sort of the Me Too market that people are wanting to copy, and
Interesting.
we've actually been so advantaged by that, because
Right.
a Khata book is being copied in LATAM. We've
Mhm.
seen the LATAM, we've seen the Khata book of LATAM.
Interesting.
We've seen the Khata book of MENA. We've seen
Right.
the Khata book in Africa.
Right.
Khata books. And so,
Right.
this is just one example of an Indian company, which everybody wants to sort of,
Replicate.
farm out. So this is the Indian sort of and so it's a very
Right.
interesting shift where this, to your point, we might not be getting our, it's not like a SaaS, but it
Right.
is actually, imitation is the best form of flattery, because
Right.
everybody wants to be
Right.
Khata,
Right.
and they're actually building businesses. In fact, we saw Buku Warung and Buku Kas, both sort
Right.
of, also similar to Khata book. And so
Right.
I really do think that, India, and this is just one example, there are many, many other examples where
Right.
now India has become the focus, and it's, I think, the biggest global consumer market, internet startup market in the
Sure.
world.
Right.
Bar and none. I think it's a bold statement to make, but I think this is going to be India's decade. The next decade is going to be India's decade for that. And
100%.
seeing that, and we are seeing that just in the imitation that's happening, where folks from Africa, from MENA, from LATAM and from Southeast Asia are talking about the Indian equivalents that they are sort of trying to trying to sort of copy and look up to and persevere towards and build software equivalents, and really India is the heartland of the best excellence in software and what we've been able to build in products. Yeah.
Amazing. That's amazing to know, right? I mean, that's incredible, right? I would have loved to see a couple of Indian brands, right, expanding into these markets, right, and build that kind of similar dominance that they have possibly in India, right, and hopefully soon.
Hopefully soon. I mean, I don't think this is just the beginnings of
Right.
just the global adoration, if you will. Just in terms of the product, it's sort of it really is a nod to the. It's more than a nod to the product
Right.
building capabilities of India and whatnot. So I think we are going to get there very soon. Yeah.
Very interesting. Madhu, towards the end of our conversation, right, now, I'd love to understand what are the next 2.5 years like. You're sitting on a lot of dry powder, like you said, right? You're at the third fund, right? A large part of your thesis is looking at India. What are the next 2.5 years like? What is it that you set for yourself? Any
Absolutely.
milestone?
No, it's a great question to have asked. We've raised 125 million for Fund 3,
Sure.
that's our first close, and we are continuing to find excellent companies in India. Even in this difficult market, India is popping up.
Sure.
We find some great inspirational stories from India going to MENA and and other places. I think really the milestone is to invest in the best and the fastest growing startups across the world. We have
Right.
the dry powder now to do it, and now we have the signal to noise ratio too. It's really high. It's just one of the best times because
Sure.
all of the data players are sort of gone. There's not too much of noise in the market. Now the signal from our data really emerges. We can go
Interesting.
after the companies, we can go after the best companies. And I think, there's going to be some history created because times like these actually lead to some of the best companies, as we all know from,
Right.
the past few
Interesting.
recessions.
Interesting. I think this is going to be directional for many people, right? And I cannot let you go without asking this question, right? What are some of the emerging areas that you're looking at? What is it you're saying? Let me go to that. What are the
Yeah. So
directions?
yeah, I think like I said, the data is kind of pointing us in so many different directions.
Sure.
And so we don't really have sort of one pattern emerging, and that's the beauty of our fund. We don't
Right.
want to sort of have like directionality that's
Sure.
that's paralyzing us.
Right.
And we're looking at space, we are looking at B2B, we're looking at deep tech startups, all from
Right.
India too. And that's really vast. We're looking at climate tech in India,
Right.
and we're looking at some amazing companies, clean tech, climate. This is a new phase for India, and we're pretty excited. Yeah, to be.
Super. Super. Without giving away too much, Madhu, it's been a pleasure to host you.
Thank you.
Last question in this conversation, very cliched, but I think also very very important, right? You've been an operator, you've been on both sides, right? Today you're kind of investing in these companies, hand-holding them, possibly being a sounding board for the founding team to sort of expand, grow, prioritize, right? Like, which is so much more important when you're in a market like India, right? As vast as India is. Right. What is that advice that you want to give out to founders, out there? I'm sure a lot of them are going to take it, just so much more seriously. Right. What would that
I
advice be?
I think that it takes a special kind of a person to be an entrepreneur, and we all are
Right.
super lucky. And I say this every time, and I mean it.
Sorry.
You're super lucky to have front row tickets to, and be in the backstage. Amazing performers.
Right.
It takes a special kind of a person to have that vision, that determination, that tenacity,
Right.
to live with the problem for a very long time and to build on it. And it's just not easy. Having been an operator, I have extreme amount of sort of empathy and also just admiration for that.
Right.
And so really there's without in all humility, the first thing to recognize is to have the humility to know that there's nothing much that you can tell a founder who is blowing it out of the park. So we want to
Right.
continue to invest in those founders that are blowing it out of the park and find them. That's success for us. But also to just sort of ask them and give them, hopefully we will be able to give them the confidence that we are behind them, whoever we
Sure.
back. and to just keep persevering towards that goal, and just sort of not to just to sort of continue on the path, because
Right.
it's a difficult path. And there are not too many paths that you can take other than Everest, where you will have this just that amount of pushback at every step of the way. So it blows me away every time to be working with these with founders, even just taking calls, folks
Right.
that we don't understand. It's just a pleasure to be able to do this job and spend time with some of the most amazing people on the planet, which I think are
Right.
founders. Yeah.
Amazing, amazing. Madhu, thank you so much for doing this. It's an absolutely spectacular session, right? Loved every bit of it. I still have those qualms, right? You didn't give us too much right away in terms of some of the opportunities,
Yeah.
but this has been an absolutely spectacular session, right? I think the good part is that this the entire phase of COVID, while of course it's touched each one of us at a personal level, I think it's transformed the country, right? And I think it's transformed countries not just like India, but I think across the world, across the globe. I think data is going to become just so much more important, right? And I think data-led investing, for example, is going to be just so much more critical going forward. And I think
Totally.
the overall effect of that in how ROIs, for example, are expected and eventually sort of get delivered. This inefficiency of praying and spraying, right? I think it's going to go away, which is just so much more important, right? Because wastage of capital is not the right way of playing the game, right? I think
Couldn't
that's
agree.
something which, and I think data driven investing brings in that sharpness, right? Which is just and that efficiency which is required, right? Hopefully,
That's
business is
not
going to require lesser capital to grow and scale,
so
and we're gonna be moving into environment of efficiency, right? And nobody's going to be complaining. Hopefully,
no
that,
one's
right?
absolutely. Totally. I think concur on all those things that you just said. We are
Right.
excited. And we are excited to be using this, the data-driven efficiencies that we are now going to see tenfold because of the market corrections that I think were in play, but now it's now more than ever. But it's been a pleasure, Ashu. Thank you so much for having me.
Thank you, Madhu. And I'd look forward to having you much sooner, talking more about, some of these, the secret sauce, right? The bits and pieces. We'd look to capture some of that across our other conversation, right? Madhu, thank you so much.